Multifamily Mindset
Podcast. Think bigger.
Hello, and welcome back, my friends, to another awesome episode of the Multifamily Mindset Podcast. I'm your hostess, Cyndi Maguire, better known as Cyndi. Show me the money, Maguire. I wear a few hats around here. I'm a strategist at the Multifamily Mindset, seasoned real estate investor, capital raiser, co-founder of Gold Bar Partners, and mentor to many budding real estate investors. If you're new here, we're happy you found us and super stoked to have you join our ever-expanding network. So if you're looking for inspiration, practical advice, or just a good story, you've come to the right place. Now, let's dive in. Today, we have my friend Cameron Stewart, a commercial insurance broker since 2013. With a focus on real estate investors nationwide, Cameron is dedicated to delivering cost-effective solutions and fostering client relationships. A trusted partner in the network and always willing to help any insurance challenges investors encounter. All the way from San Diego, California, let's welcome Cameron Stewart. Hi, Cameron.
Hey, Cyndi, thanks for having me.
Hey, thanks for coming on board. So I saw you just last week at a meetup and you were talking about insurance. And I was like, you need to come on the podcast because how did I forget? I mean, I guess I did, but it was always a great reminder to see you. And I know I have sent so many students to you to talk about insurance and all that good stuff. So now I want you to talk to our audience about insurance. So first, how'd you first get into insurance?
So I didn't grow up wanting to be in insurance. I was putting myself through college and I have an uncle in insurance. So that's a pretty typical answer. And just started off working for some family friends, setting up appointments, and I liked it. I was young, I had the energy to set appointments and sort of just learn the business that way by doing, and fell into the real estate niche pretty quickly. At that time, I wasn't living in San Diego, I was living in Florida, and it was 2013, and we were kind of in a similar market that we are right now with insurance, where it was softening, and so we were saving people money when we were able to quote.
What does it mean by softening?
The prices were going down. It was getting easier to do business versus the last couple of years. We've seen the prices going up and harder to do business. They need more information to underwrite. But at that time in 2013, it was more of a soft market. So it was fun for a 22-year-old to be saving people money and doing a good service. And we're kind of entering that market again a little bit. But that's how I got into the business. And 12 years later, I'm still in it. I enjoy it.
And you do, your brokerage does commercial insurance nationwide.
Yes, we are licensed in all 50 states. I'm licensed in around 20 that I have clients in. That's the nice thing about real estate is it's a nationwide business. I don't have to necessarily, some people recommend it, but you don't have to necessarily live where you own property. You don't necessarily need to live where you insure property or finance property. So, yeah.
Okay, so you understand risk and risk management. What are some risk apartment owners face?
Yeah. I touched on that in the beginning of the presentation, and there are some that are insurable, some that are less insurable that are kind of out of my purview, but you take risks as real estate investors, operators, property managers, developers, remodelers. Number one right now, of course, is debt service. The market, interest rates can be challenging. You have investor influence, investor fiduciary responsibilities in that way. Taxes, depending on what state you're in, can fluctuate. But as far as insurance goes, we're really talking more about property damage that could be from tenants. Most of the time, cause property damage, which is why renters insurance is getting so popular. Contractors. Right, you always want to make sure a contractor has their own insurance and name the additional insured. Things can go wrong when contractors are doing work to your property, or a landscaper is digging a ditch and forgets to fence off that area and somebody twists an ankle or worse. Things of that nature can present a risk to you as a
How
property.
about natural disasters like
Yeah,
hurricanes and freezes and things like that?
yeah, the big freeze was really hard in Texas a couple of years ago.
Yeah.
So many frozen pipe claims. Of course,
Some
yeah, yeah,
all
yeah,
over.
yeah, and wildfires, hurricanes, earthquakes in certain areas of the country. So depending on the market that you're focusing in, those can be challenging. In addition to that, it brings up another potential risk that you take is higher deductibles in those areas. So
Mm.
um, if you look at a property that is in Houston, and is maybe $10 million in values, a lot of people aren't aware that the deductible is typically 3% or 5%. Sometimes you can see a little bit lower, but that's 3% or 5% of the values. So for easy numbers, a $10 million property, you have a $300,000 or a $500,000 deductible for hurricanes. Well, if you pick
Oof.
that asset up and you drop it in Phoenix, where there's not as many natural disasters or just really hot sun, um, that deductible might be $5,000 versus 300,000 or $500,000. So that's something to keep in mind if you're looking in the Midwest where there's hail, or anywhere within 50 miles of the Gulf or the Atlantic Ocean. Is insurance deductibles are another risk that you take in the real estate business.
Okay, so let's talk about finding insurance or a broker and choosing one or selecting one. That process, what type of questions should we be asking?
Great, great, great question. Yeah, I definitely recommend interviewing insurance brokers. And uh, a common misconception that people have is it's similar to buying car insurance or home insurance, where there are many options and you can call three brokers and sort of get three different options. Well, the way purchasing commercial insurance works is a little bit different. There's not as many insurance companies. You have to find a broker who really specializes in your type of business. So if you're buying apartments, you have to work with an insurance broker who has experience insuring apartments. And then once you find that person, whether it's me or another insurance broker who focuses on insuring apartments, we sell the exact same products. We work with the exact same insurance companies who have the exact same underwriters. And those insurance companies only allow one of us to approach them on a specific transaction at a time. They won't talk to more than one. And so it's the best approach is to pick one broker that's going to represent you. However, I don't discourage anyone from interviewing insurance brokers. And when you do that, you can ask them questions. Some good questions that I recommend asking is, what insurance companies do you work with? If they can rattle off half a dozen to a dozen, that's probably a good sign that they
So,
know the market.
Cameron, what insurance carriers do you work with?
That's a good, you're putting me on the spot. So yeah, we work with a lot of insurance companies. I mean, we work with the excess and surplus lines marketplace where there's many companies, but we directly work with a lot of insurance companies, probably 30 that insure apartments, like Zurich, Philadelphia, AmTrust, Travelers, Cincinnati Auto Owners, CIG, these types of companies. But if you were talking to me about a specific market and a specific asset, I'd be able to drill down and tell you what companies that we're going to go to, what the challenges are with that specific property, what information we need to get for those underwriters. And that's the purpose of that question.
Okay.
You could also
What
ask
else?
them, go ahead.
Well, no, what else?
Oh, you'd also ask them for a soft quote, an estimate. If an insurance broker has focused in commercial real estate, multifamily, for any extended period of time, they should know that they need to be able to help their clients with a soft quote. to help them budget before they submit an offer, a purchase price offer to buy a property, because insurance is a variable cost that could play into the purchase price offer big time. And so, insurance brokers should be able to provide you an estimate, explain all the details of it, whether or not it would align with Fannie Mae, Freddie Mac's requirements, or whatever bank that you're going to end up working with. You
So
can
I'm going
have,
to ask you a question with that.
okay,
You said you all use the same carriers,
yeah.
or most of you. So if I ask you for a soft quote and then I ask someone else for a soft quote, should they be about the same number, or can everyone
You,
give me a soft quote?
yes, not all insurance brokers will be very excited about sharing a soft quote. But if if they don't really specialize in real estate and understand that the purpose of that is really to help you budget and not under budget for insurance, because they don't want to be held to that number, because there's such a variance depending on once you get into due diligence and the information that you get. But yeah, you'll see soft quotes be different. Sometimes I tell people that if you get a soft quote from someone else, mine's probably going to be way higher, because at that stage that you're in, you're preparing to submit an LOI. I am not trying to sell someone at that point. I'm trying to look out for their best interest and avoid them under budgeting, only to end up having insurance come in hundreds of dollars more per door at the end of the day and present a big challenge later. So I'd rather have my client, um, look for ways to minimize costs per door in things like utilities, not insurance. If that makes sense.
Oh yeah, we like being more conservative because
Yeah,
I'd rather it be a nice bonus that it's less
yeah.
than having it higher.
Yeah, and insurance renews once a year. So unless you're planning on flipping a property in 6 months or a year, you're gonna have your insurance renew multiple years. And it doesn't hurt to be conservative with insurance, because you could have a claim and get dropped and your insurance costs could go up anyways. So for instance, if I give you a soft quote that says 1,100 a door and we end up being 700 a door, that's great. That's icing on the cake. I don't necessarily think that I should have sent you a quote for 800 a door or 700 a door in the first place. I think we did the right thing by budgeting 1,100 a door.
Okay. What other questions should be asking a broker?
Some questions I think people should ask is, how do you handle insurance claims, and what risk management support and guidance can you give me? I mean, being in real estate, insurance brokers should know how to review contracts with roofers, and other contractors that might be doing CapEx projects, and make sure that they're helping the landlord and the investor, you and your third party management company, require the right insurance for those contractors, so that if something happens, you don't have to use your insurance and have your insurance get dropped and quadruple next year. It can all be funneled through the contractor if there's property damage. And then how do you handle an insurance claim? We do not get paid to help our clients with insurance claims, but for me, it's a moment of truth. And I'll tell you that I'd be there every step of the way, fighting for you, setting up calls, making sure we're moving the process along. And so that's a pretty good indicator of experience as well. So those are 4 good questions. What insurance companies do you work with that would, entertain this asset? Can you help us out with a soft quote? What type of support do you give from a risk management and claims standpoint? And I think you'll get a good sense of how invested that insurance broker is in multifamily or real estate, if you're considering that.
Okay. Any other misconceptions new and seasoned investors might have on insurance?
Absolutely. A lot of folks that are doing a lot of underwriting and submitting offers get used to a certain number per door for insurance, depending on the market that they focus on. They might say, hey, budget $1,300 a door in Houston and budget $1,000 a door in Dallas. That can be dangerous, because most of what you spend on insurance is for property insurance, which is more determined by the cost to rebuild the building plus the rental income.
How does the
Generally,
rental income come into play?
if that's insured, if there's a claim, your net operating income plus continuing operating expenses is what the adjuster is going to calculate and refund you if your insurance is structured correctly while you're doing repairs. And so that's property insurance. That's most of what you spend. The general liability insurance is usually $150 to $250 per unit. That is rated based on number of doors. That's for if someone gets hurt and claims that the property owner was negligent. But property insurance is more developed on kind of the square footage of the property. So if you have a $10 million property, just for easy numbers, that could be 50 townhomes that are 1,200 square foot units with ground floor garages, or it could be 200, 500 square foot studios in that same property. And the insurance costs are going to be very similar. The general liability insurance is going to be 150 per unit. So it's going to be more for the studios and less for the townhomes because it's kind of rated per door typically. But the property insurance is really based on that 10 million. It's based on the square footage plus the rental income. So 10 million, maybe that cost is 100 grand. So that 100 grand, it could be divided by 50 units or 200 units. And so that 100 grand for property insurance could be 500 a door, or it could be 2,000 a door just for the property insurance. So I'll get calls from people who are looking at properties, say in Dallas, and say, hey, give us a soft quote, Cameron. And I'll send them a soft quote that's 1,600 per unit. And they'll call me back and say, hey, I appreciate it, but I own properties in this market and we pay 1,100 a door. Why are you telling us to budget 1,600 a door? And I'll say, cool, let me look at that other property. What's the address? And I'll pull it up and I'll see that those are studios. And the property that I gave a soft quote for are 2 and 3 bedrooms with some garages. Or the other big thing that's become an issue sometimes is there's interior hallways. So the gross square footage can be way more than the rentable square footage. And Fannie Mae, Freddie Mac, other lenders are really getting detailed and looking at the gross square footage, not the rentable, and making sure that you're insuring for at least 120, 30, 40, 70, $80 per square foot on these properties. And so that can inflate your costs significantly. So those are things that I look, when I do a soft quote, those are things that I'll look up and make sure there's just things that could blow up later and bring the costs up 30, 40, 50%, right? And so that's a common misconception. That was a really long answer. The common misconception is that there's a per door rate in a market. There's no such thing. The age of the property, the average unit size, has there been claims, those types of things make the rate per door for apartments on insurance anywhere in America between $200 a unit to $3,000 a unit.
Wow.
I've seen on the high end. Yeah.
Okay.
Yeah.
So at what point should an investor reach out to you? Like when they're
I
doing
recommend,
underwriting?
yes, I recommend just like you leverage your building relationships with commercial real estate brokers or finance partners, equity partners, investors, other syndicators. I'd recommend building a relationship with an insurance broker that you can lean on to help you minimize the time that you spend on insurance. And I'm here when you're thinking about submitting an LOI, helping out with a soft quote. If you get more information from a real estate broker and find out it's got aluminum wiring or there were claims, call your insurance broker, say, how does this impact our soft quotes? Should we even do this deal anymore? How much more do we need a budget? And then another misconception though is that and a source of frustration that I noticed earlier in my career is people really want to know, when are we going to get the hard quote? Cameron, thanks for the soft quote, but when do we get the hard quote? We need to know our final number, right? When you get under contract, it's like, okay, Cameron, you've been great, you've helped us, but now we need to know the final number. And you're not closing for 60 days, and we don't still have pictures of the electrical panels or the claims history of the seller's insurance. So, one thing I want to add is that you do, and I have my new purchase timeline that I shared with everyone in the coaching call and in the meetup that I saw you at last week. But the insurance quotes take a couple of weeks typically. We need to, once you're in due diligence, we need to get the seller's claims history, which sometimes is a lot of back and forth and layers of communication between the real estate brokers, the seller, and we need to confirm the brand of the electrical panels, confirm the condition of the roof, and what our plan is for CapEx. Once we have all that buttoned up, then we can approach insurance underwriters. And we might be going to 12 different companies on a specific property, and getting feedback. And then we really hone in on the right partner for that property and ask them to firm up their quote. And that process just
How
takes.
do you find the right partner then? Is it their quotes? Is it their coverage? Is it their cost?
Well, coverage, coverage plays a factor. Sometimes there's, and it comes into your buying style as an investor. Sometimes, for instance, a big one is on general liability insurance. One carrier might exclude assault or battery. So if somebody gets assaulted on the property and says, hey, you guys should have had better lighting or security, you won't have money from insurance to hire an attorney to go defend yourself. You'll be doing that yourself. And so sometimes we might be stuck in a situation where I say, hey, I can get you coverage with assault and battery, but it's going to be $300 or $400 per unit versus $100 per unit for this quote over here that excludes assault and battery. So sometimes that is a thing. But most of the time, we're really doing our best to minimize costs while meeting what the bank requires. Most lenders have gotten really good, and they have sophisticated insurance review departments that really dictate what we purchase.
Okay, so as an investor, and we're looking at deals, underwriting, getting our LOI ready, what are some questions that we should be asking the seller in order to get a good a good soft quote from you?
Yeah, I can help with a soft quote before you get these questions answered. But before submitting an LOI, I would strongly recommend, and I think it'd be a little crazy not to ask some of the following questions. Number one, have there been any insurance claims? And if so, how were they caused? Number two, what year was the roof covering last replaced? That's unavoidable. We need to know that information, or we need to know what your plan is going to be immediately upon closing with replacing the roof if you don't know. What is the brand of, if the property is built prior to 1990, especially if it's built prior to 1980, we need to know the brand of the electrical panels, the type of wiring, and the type of plumbing. Those are the main 4 or 5 questions. Also, is it in a flood zone? You can check, you can Google FEMA flood map and plug in the address and see if it's in a flood zone or not. It's not shaded, it's not in a flood zone. If it's shaded, it's in a flood zone. Reach out to me, I have more advice on that. But to me, those are the most important questions to answer, because if it's got aluminum wiring or cast iron plumbing or outdated electrical panel brands, or the roof is in bad shape, obviously you're going to need a budget to replace those items. It can also impact the cost of insurance depending on how long it's going to take to fix, or if you're going to fix it, or if you're just going to remediate it, and not necessarily fully replace those items. And then insurance claims, often they're explainable. If there was a fire 2 years ago and it's fully repaired and it was caused by a tenant who no longer lives there, sometimes we can explain that away. But if we find out that there was an arson incident, not a lot of insurance companies are going to want to insure that property until it's been more than 5 years. And we have 5 years of a report from an insurance company saying no claims for the last 5 years.
So what do you do when you have had something like that? And can you find insurance?
We can
If
find insurance, it's just very expensive. And we need to understand the third party manager that you're going to work with's experience, maybe your resumes, your team's resumes, and provide that to insurance companies and just advocate for the fact that those tenants who cause that property damage no longer live there. They haven't lived there for 2, 3, 4 years, whatever the case may be. We're going to have security cameras, gated entrance, any additional information that we could share with underwriters to help the most competitive option given the circumstance, release a quote.
okay.
Mhm.
So with insurance right now, how does the outlook look right now?
So, like I said earlier in the call, the market is softening overall. A lot of folks who purchased properties in the last few years, when they first purchased insurance, they were purchasing insurance in the hardest property insurance market most people have ever seen. Um, in those cases, rates are going down 15 to 30% is what we're seeing. Um,
So if you were newly quoted the last few years, it might be a good time to shop around again.
yes, I'd definitely consider interviewing insurance brokers, getting feedback. Um, But before anybody approaches the market, understand where your current broker is going, what companies they're going to, because another broker won't be able to approach them. So you can do that by asking. And when I'm working on a transaction, I always share what companies I'm going to and reiterate, you don't want multiple brokers going to the same companies. But if someone on your team feels strongly that you need to interview an alternate insurance broker, you can go to a secondary broker and say, hey, we already have a broker. They've already gone to this list of insurance companies. If you have someone else, great. If not, we want to be upfront and let you know so you don't waste your time sending applications to these same companies that are already working on it for another broker. And that's how you can handle that process successfully and actually generate real interest from insurance brokers. Because if you're just going out and you think these insurance brokers are going to work hard for you when they're kind of blind, they're probably going to focus their time on something else. But however, going back to the state of the insurance market, I do want to back up a little bit and preface it with there's still a lot of situations where properties built prior to 1990 are insured with carriers like Travelers, Guard, AmTrust, Nationwide that are long-time apartment insurance carriers that just won't insure properties built prior to 1990 for a new owner. And so you still run into situations where a seller's paying $300 per unit, but and Travelers or one of these carriers might renew for the previous owner, but for a new owner coming in needing a new insurance quote for them and their team and their LLC that's going to buy the property, they won't quote. And so you still run into situations where in a new purchase, you might end up paying 3 or 4x what the seller's paying. Even though rates
So
are going
so
down.
when we're underwriting and we see the seller's cost per unit for insurance, we know that that probably won't be the same for us.
It depends. Yes, often. Often it's higher just because the cost per square foot to rebuild is higher. Lenders have gotten more detailed with their insurance requirements. The rates for insurance have just gone up on top of the basis, which is the cost per square foot to rebuild. So yeah, often it's higher. How much higher? Could be 10%, could be 300%. And that's why it's good to lean on an insurance broker so you don't spend too much time underwriting something where the insurance probably going to make it very difficult to purchase at a certain purchase price offer.
Okay.
Yeah.
So, what's the best advice you can give our multifamily investors?
When it comes to purchasing insurance, I would
Yeah.
I would say I would say just lean on, think of insurance like you think of your finance relationship. Think of insurance like you think of potential equity sources. Think of insurance like your commercial real estate broker relationships. Your we're here to help you save time um, on insurance. And think of us as time savers. We can help you minimize the time
Or
that you
deal makers.
yeah, or deal makers. Yeah, we're an important piece. Yeah, we can be a very important piece of a team. And I wouldn't discount that. Maybe not as important as finance, maybe not, definitely not as important as real estate brokers who can actually bring you the opportunity. Definitely not as important as your investors, but we're right there.
You
We're
know
right.
what? You're part of the team. You're just as important.
Yeah,
So
and
don't give yourself less credit.
yeah,
You're part of the team.
yeah.
We all play a different part on the team. So,
We can, yeah.
well, you heard it here from Cameron. Where can our listeners find you?
So you could find me um on LinkedIn for sure, Cameron Stewart. I don't, my Instagram's not that cool, but it's Camsurance, CAMSURANCE. You can call me anytime. My cell phone's 561-445-4098, or email me at cstewart@crestins.com. And I'll get right back to you.
Okay, thank you so much, Cameron, for being here.
Awesome. Thank you, Cindy.
Yeah, and thank you, my friends, for tuning into the Multifamily Mindset Podcast. We hope you enjoyed our episode with Cameron and on insurance today. Please join us again for more stories, insights, and inspiration. Until then, keep thinking bigger and get better every day.
Multifamily mindset. Podcast. Think